Something happened 4 days ago that sent shockwaves through every single financial market on the planet. The United States Supreme Court, in a stunning 6-3 ruling, struck down President Donald Trump's sweeping global tariffs, declaring them unconstitutional and telling the most powerful executive in the world that he had simply gone too far. Stocks went haywire. Bitcoin dropped. Oil. Bitcoin dropped. Oil fell. And then something happened that nobody fully expected. Silver surged 4% in a single day. Gold hit a 3-week high, and precious metals outperformed almost every other asset class in the immediate aftermath. Today we are going to break down exactly what happened, why silver reacted the way it did, what Trump did next, and most importantly, where the silver market goes from here. This story is still unfolding in real time, and you need to understand every piece of it. Let's go. On the morning of February 20th, 2026, the Supreme Court handed down its decision. By a vote of 6-3, Chief Justice John Roberts wrote the majority opinion stating that President Trump lacked the peacetime authority to use the International Emergency Economic Powers Act, known as IEEPA, to impose tariffs. The court's position was clear. In light of the breadth, history, and constitutional context of that asserted authority, the president must identify clear congressional authorization to exercise it, and that authorization simply was not there. Justices Clarence Thomas, Samuel Alito, and Brett Kavanaugh dissented. It was a landmark decision, one that immediately invalidated the sweeping Liberation Day tariffs that Trump had imposed in 2025 and had reshuffled global trade for over a year. These were not minor tariffs. They were aggressive, across-the-board levies that had rattled supply chains from Asia to Europe, contributed to a slowdown in GDP growth to just 1.4% annualized in the fourth quarter of 2025, and created a constant cloud of uncertainty over every business that relied on imported goods. The immediate market reaction was exactly what you would expect from a normal playbook. Stocks jumped. The Nasdaq rose nearly 1%, the S&P 500 gained 0.7%, and the Dow Jones Industrial Average climbed 230 points. Companies that had been hammered by tariff exposure, retailers, appliance makers, logistics firms, surged. Amazon and Apple were among the best-performing Dow stocks of the day. Treasury yields drifted higher as investors digested what this meant for growth and inflation. The US dollar initially popped against the British pound, the euro, and the Japanese yen. Everything looked like a classic risk-on day. Relief across the board. Tariffs are gone. Risk assets win. Precious metals should fall. Except that is not what happened at all. And this is where the story gets genuinely fascinating. While stocks were seesawing and traders were celebrating the death of the tariffs, silver futures surged 4%. Gold rose more than 1% on the day. And by Monday, February 23rd, gold had climbed another 2% to a 3-week high above $5,206 per ounce, its highest level since January 30th. Silver followed right alongside, with spot prices pushing back toward $88 per ounce, dramatically outperforming gold for the second consecutive week. Independent analyst Ross Norman put it plainly. The price recovery in both gold and silver has likely been assisted by concerns, or confusion even, over the outlook for tariffs. And that word, confusion, is the key to understanding everything that happened next. Here is why silver rallied when it logically should not have. The moment the Supreme Court struck down the tariffs, President Trump called the ruling deeply disappointing. He said he was ashamed of some of the justices, called the decision terrible and defective, and blasted his own nominees, Neil Gorsuch and Amy Coney Barrett, saying their decision was an embarrassment to their families. The World Gold Council, whose analysis also speaks directly to silver given the close relationship between the two metals, noted that the physical market will experience increased activity between the London OTC market and the New York market as physical stocks are repositioned in response to the new tariff landscape. They added that while uncertainty fades briefly after the ruling, ongoing geopolitical and economic risk factors ensure that gold and silver's safe haven appeal remains firmly intact. The removal of one tariff regime does not remove the fundamental reasons investors hold precious metals. It simply reshuffles the geopolitical chessboard. So, where does silver go from here? As of today, February 24th, silver is trading at approximately $87 to $88 per ounce. The critical technical level every analyst is watching is $90. Veteran analyst Christopher Lewis has identified a clear consolidation range with $70 as the floor and $90 as the ceiling. A clean break above $90 would be a significant technical breakout and would likely open the door to a rapid test of the $97 to $100 range, a level that CoinCodex's algorithm actually forecasts silver reaching by March 1st. On the bullish side, the structural case for silver has not changed one bit. The supply deficit heading into its sixth consecutive year, the relentless growth of solar, EV, and AI industrial demand consuming 60% of global silver supply, and the gold-silver ratio now compressed to 59-1. All of these factors point toward continued strength. Gold-silver's lead analyst Alan Hibbard remains the most bullish voice in the room, forecasting silver could surpass $175 per ounce before year-end if the structural deficit deepens and industrial demand continues accelerating later. In the base case scenario, silver consolidates between $80 and $90 as the market digests the new tariff reality under Section 122, waits for clarity on Iran, and monitors the Fed's path on interest rates. Fed Governor Christopher Waller has stated that his decision on a March rate cut will depend on February labor market data, and markets currently price only a 5% probability of a cut at the March 17th meeting. That is a relatively tight monetary environment for a non-yielding asset like silver, which argues for consolidation rather than a breakout in the near term. In the bearish scenario, if the US and Iran reach a nuclear deal, which Trump's administration has signaled is a real possibility after talks in Geneva, the safe haven geopolitical premium evaporates overnight. If that happens simultaneously with a dollar rebound and a decision by Kevin Warsh to take a hawkish stance as incoming Fed chair, silver could give back its recent gains and retreat toward the $65 to $70 range. That is the tail risk scenario, but it is real and investors need to price it in. The bottom line is this. The Supreme Court's ruling was supposed to be a clean, decisive moment. Tariffs gone, uncertainty resolved. Markets move on. Instead, it triggered one of the most complex and rapidly evolving geopolitical and economic situations we have seen in years. Silver's reaction tells you everything about the true state of the market right now. When a court strikes down a president's tariff authority and silver goes up instead of down, that is the market sending a very clear message. The uncertainty is not over. The safe haven trade is not done. And the structural fundamentals driving precious metals higher are stronger than any single legal ruling can neutralize. Silver, at $88 today, with $90 resistance directly overhead and a wall of geopolitical and policy uncertainty behind it, is a market coiled for its next big move. Which direction that move goes depends on the next move from the White House, the next word from Tehran, and the next data point from the U.S. economy. Stay close to this story, because it is far from finished. If this breakdown helped you understand what is really happening in the silver market right now, hit that like button, subscribe, and drop your silver price target in the comments. I will see you in the next one.